We don't verify where your borrower works, how long he has been self-employed, or anything of that nature. We just look at qualified assets.
We can actually go ahead and use both income types in order to get that qualification.
If it comes to, for example, for a 1K account, we don't want it to be liquidated. We will just do the haircut of 70% and that's it.
The assets are held in a revocable trust. That's something that we'll go ahead and accept for this program.
Gift funds and these products are allowed. However, we are requiring first 20% to be contributed by the borrower.
Just a quick side note, we do offer short-term rental for qualification.
Hello, everyone. Good afternoon. Let's wait for a few seconds so everyone could join us. I see some first attendees. While we're waiting, I'll give you a brief introduction. My name is Irene, and I'm with Broker Support Team here in AMD, and I'm happy to host this webinar today. Today, we will discuss one of our non-QM products, the asset utilization. If you ever want to know more about it, or if you have a borrower who would like to go with this income type, or you would like to expand your pipeline with a new product, you are in the right place. So I see attendees still coming. And I guess maybe we could start. So hope the majority has already joined us. Let me introduce our speakers today. Today, I'm happy to introduce Nadezhda Smokvin. She is a business development team lead here in Indie Mortgage. She is the expert of our products and a very nice person in general. She will share all the secrets of asset utilization program. She will give us the program highlights. She will tell us who is an asset utilization borrower, and she will give us some A&D solutions. Also, today, Brennan Maloney, our underwriting team lead, and it means we have a unique opportunity to have some underwriting insights. We will be able to see in practice how asset utilization scenarios work. So thanks for being with us today, guys. Talking about our webinar etiquette, please do not be shy. You are more than welcome to put your questions into the Q&A box, and we will answer them after we finish the formal portion of the presentation. All attendees will receive a copy of this presentation and the recording of the webinar within 24 hours. Also, in the end of the session, you will be able to pass through a short survey for our better understanding how we were and what we could improve in our future webinars. Let me briefly tell you about the Indie Mortgage in general. Being almost 20 years in the mortgage, we are very proud to be officially verified as #1 non-QM lender. Also, this year, we became a Stevie Awards Gold winner in Innovating Mortgage Technologies. Already more than 6,000 partnering brokerage companies trust us, and I hope you as well. If anyone who is joining us today is still not approved with us, please join. You can easily fill out the package anytime you have a minute. The form is on our main website page. Whenever you are ready to discuss any scenario, your account executive will respond within 30 minutes. AD Mortgage is a part of the group. Our investing partner is an Imperial Fund backed by Wall Street credit lines, and that cooperation allows us to securitize our loans on the market. Talking about our footprint, please remember, we are operating nationwide. On the map, you can see the states where we are fully licensed and the states where we can do investment-only loans. So you see, being a partner with us, always a very good idea. So with that being said, let's move on to the core of today's webinar. And let's know more about asset utilization. I'll pass the word to Nadezhda. Nadezhda, hello.
Hello, Irene. Hello, everyone. It's really nice to be back to the webinar session. I haven't been present for quite some time. Thank you, everyone, for joining. I'm pretty sure you will find a lot of interesting information about this product. It's an awesome product that you can use as an alternative for people who have unstable income, but they do have a lot of assets. So the person has to be rich on assets, but for whatever reason, because the taxes don't show income or the income is just unstable, you can rely on this product. It allows us not to use traditional income at all. So we don't verify where your borrower works, how long he has been self-employed or anything of that nature. We just look at qualified assets, and that's basically it. So it makes the product very easy to qualify for and very streamlined, because only basically asset documentation are being verified. So who will be the best borrower for this product? First of all, it's going to be the high net worth individuals. So people who have money in savings, in stocks, in bonds, in retirement accounts, but again, do not have stable income. Retirees who are currently retired, not working, but they have either savings or their retirement account is stable, they can use that to qualify for this product. Any type of self-employed who, again, doesn't show a lot on taxes, but they have good volume in capital and liquid assets, we can go for that, or like general investors. So those would be your main borrowers that you should pay attention to this product with AD Mortgage. This page highlights the A&D product standards for the asset utilization program. So everything is pretty straightforward. The key features, the minimum FICO score is 620. We can go up to 80% LTV. But one of the most important parts that you should keep in mind that we can qualify borrowers not only we are dividing them into super prime and prime borrowers. So both of them can qualify for this product. This is something that is not highlighted here. So if your borrower has some recent credit event history, but last 12 months were clear, they can still qualify for this product under the prime product. You will have a little less favorable pricing, but you can still go up to 80% LTV. When it comes to the assets that can qualify for this product, we will use checking, savings, stock, and bonds with 100% of the value. But when it comes to retirement asset, we have a 30% haircut, so we will use only 70% of those assets. DTI can go up to 55% when you have a well-qualified borrower, so your FICO score has to be pretty high to qualify for 55%, but it's still an option. And one more thing I wanted to mention that is not highlighted here, but it's a pretty good point, is that this product can be qualified not only as a first lien product, but we also do asset utilization on the second lien position. So whenever you have a borrower who had the first lien with a nice interest rate back in 2021 or something like of that nature, and you want to get some equity out, you can go with the second lien position as an asset utilization product, and you're still capped at 80% CLTV. So it's a really good feature when you want to use that option. Okay, so gift funds on these products are allowed. However, we are requiring first 20% to be contributed by the borrower. So we have this cap of 20% minimum contribution, and it doesn't matter on which type of property and which occupancy is this product. So it's always going to be 20%. This program is designed for any type of occupancy, so you can qualify and for primary, second, and investment property with this product. And we can qualify basically almost every residency. So it can be US citizen, it can be permanent and non-permanent resident, and also we will include in this 18 borrowers. So basically the only residency that we cannot qualify with assets only, it's going to be a foreign national. The rest, if you have the deal of this nature, please reach out to your account executive and let's structure it. It works very easy. So we basically have a formula where your qualified assets are dividing by 60, which is like 60 months. And that's how we come up with your qualified income. Qualified assets, again, we mentioned already, is going to be checking, savings, stocks, bonds, or 70% of retirement assets. So we will split that by 60. And basically the requirement that we will have that you have to qualify, to have those qualified assets being qualified, basically, you have to have either 1.1 of the loan amount. So if you have a loan amount of 100,000, basically, so you have to have at least 110,000 in your bank account remaining after all the expenses, after down payment, closing costs, and the reserves being considered. Or $1 million. So the lesser of two, depending on what loan amount do you guys have, the lesser of those two numbers, 1.1 or $1 million, that's the requirement to have the qualified asset. And another one requirement that will differ a little bit from the traditional seasoning, it's the seasoning will require 4 months. So if usually it's 60-day seasoning period, when it comes to the asset utilization, we want to see full 4 months being seasoned. But the good news is that it doesn't have to be liquidated. So yes, we are looking for the seasoning, but if it comes to, for example, for a 1K account, we don't want it to be liquidated. We will just do the haircut of 70% and that's it. So to qualify, you just provide whatever assets you have, and that's the end of story. I think we covered everything on this page. Yes, so how the asset utilization program works, again, it's very easy. It's just a formula. You qualify the assets, you are dividing it into 60 months, and you come up with the qualified income. Eligible assets, it's normally going to be checking and savings account. That's the most that we see. Retirement assets are very popular. Even though we have that haircut, it's still a very, very popular asset utilization source. Stocks and bonds, we will take all 100% of the value remaining on those accounts. So whenever the borrower has any investment account, that's the good way to go. Okay, how to help your client get approved. It's really very easy. Like the main thing you need to remember again that it's 4 months of seasoning. So the first thing that you have to verify is that the borrower has those assets within the last 4 months. So if we're speaking about bank statements, require them to provide you with 4 months bank statements and make sure that those assets are there. So that is the main requirement. When it comes to anything that has not been liquidated yet and will be eventually, the same thing, just track that 4 months back. We have that seasoning because that's going to be your main requirement when it comes to underwriting verification. And the second thing, that you have either 1.1 of the loan amount or $1 million, the lesser of two, and that's basically the qualification, because we don't check. Again, we don't check traditional income, we don't check traditional employment. So basically, you just qualify your borrower off of the assets. So just gather this documentation, know these two main rules, and I promise you it's gonna go smoothly if you know those two parameters and you know that they comply with both. Okay, can you please switch the last one? Okay, I think I missed few parts that I wanted to share with you on the product itself. So there are some like real benefits to this product. First of all, that your borrower doesn't have to be worried about documenting the income. This is a really great tool when like you don't want to show something that is unstable. The borrower has 1.1 of the loan amount if we're speaking about small loan amount on their bank account, and you just go with that. And you're not limited into what property type, what property occupancy you are applying for. It's very simple because we are verifying only assets, because when it comes to income documentation, that's what delays files most of the time, because when it comes to income, it's always more complex. Here we are verifying only your 4 months of assets, so if you have a straightforward situation, it's going to be very, very easy. Their rates, even though they are higher than traditional income, they're very, very competitive. So it's not hard to sell to your borrower the rate for the asset utilization plus 80% LTV. It's not that limited. So with 20% down, they can be flexible and use the liquid assets that they have in the accounts. There's no need to liquidate assets. I'm mentioning it again because that's a very important part. Your loan amounts are pretty high on the asset utilization product. We can go up to 4 million on a loan amount. Every residency other than foreign national can qualify, both super prime and prime. So if you have a less favorable credit history of the borrower, you can still apply for this product as long as 12 months are clean. We can do first and second lien. And one of the favorite parts that I have about this product is that you can commingle this product with something else. If, for example, you have a W-2 person or any other program that is not enough to satisfy the DTI requirement, and you know that they have also assets in their account that qualify under our asset utilization product, you can commingle both. So the only thing that we will go under the worst case scenario pricing and eligibility. So in this case, if it's a W-2 commingled with the asset utilization, we will go stricter rules because asset utilization will be the worst, but you can combine those incomes, which is a great part. And also keep in mind, Irene mentioned that we are securitizing our loans ourselves, so that makes us very flexible when it comes to exceptions. So even if your remaining of assets on your account after paying down payment closing cost reserves doesn't satisfy our guidelines, ask for your AE to file for exception, because we can accept lower numbers, we can accept certain caveats in the guidelines when it's making sense, when you have compensating factors, when file just makes sense by itself. So keep in mind that, and always require an exception when it's needed. Okay, and the power of technology. The quick pricer. This is the best tool when you have a scenario, and it doesn't matter if it's an asset utilization or anything else. That's the best tool which will give you the accurate and full information and details about this product, because it not only it's intuitive and very, very easy to use, but it also highlights you what are your underwriting parameters. If your file is ineligible for any reason, it's going to specify why it's ineligible and how to fix it. Here's a snip of an asset utilization pricing using certain parameters. You can switch them either by dragging the line, dragging this during like the green part is something that you're eligible for, the red part is not eligible for, so you can either drag left and right, or you can type in. So the FICO 750 it says, you can just delete that and type in anything, because a lot of people, they don't know that it's something that you can just change manually. You can apply any escrow waivers, short-term rent or something like that, whatever requires a hit, you can apply it here. You can switch the rate, the monthly payment, the lender credit, depending on what is the main thing you're looking for. And it's going to give you all the information that you can even share with your either peers or the borrower to get on the same page. And you can price in this engine anything, including governmental loan, including FHA, VA. So anything that you are trying to price, you're just adjusting parameters and getting the accurate pricing. It's always up to date, so you will never have delays here. And one more tool that we have when it comes to your scenarios and your prospects is the scenario submission. So let's say you are not in the mood right now to talk to your account executive. You're driving and you don't want to talk to anyone. You can just send a quick information in our website, and within 30 minutes, you will have a solution. So if you have a raw information, that's like something that I suggest to use this button for. It's when you don't have like the full scenario, when you know everything about the loan and you basically are ready to submit. But when you have some raw information and you want to find out what would be solutions that your account executive can offer, that's the button to go, because it has just few fields to fill out. You put some brief information about the loan, and your app comes back to you within 30 minutes with information on what products would be the best fit, at least in theory. And moving forward, you can at least like go in the right direction and price loans in the right direction.
Thank you. Thank you so much, Nadezhda. That was very detailed. I hope I see you have some questions, and I guess we could discuss some of them after our practicing part. So let's move on right now to Brennan, and Brennan will be able to give us more detailed information about some particular scenarios, how it works in practice. Brennan, please.
Yep, thank you so much, Irene, and thank you, Nadezhda. So as far as the asset utilization program goes, we can use this program to reach a variety of different borrowers. So we have two scenarios that are going to be dramatically different in nature that we cover today. The first one, I've been calling this first borrower Wealthy Wendy, right? She's the CEO of a manufacturing company, found a little niche to operate out of. Although the company is still private, produces specific parts for an automotive manufacturers, the tax returns are super complicated, right? Even if you sent these tax returns to the underwriter, it might be a little bit tricky to qualify with them based upon corporate layering and all this stuff. So, trying to save the underwriter some headache as well as ensure that we have an approvable loan. So, given that Wendy is a high net worth individual, they're looking to purchase an investment property. They want to go ahead and buy a nice Airbnb down on the beach in Miami. Just a quick side note, we do offer short-term rental for qualification as well, if you guys are ever curious to learn about that. But with this said, she could pay cash for this property, but recognizes that she could make more money from her investments if she keeps it, tied up in the market. So a loan makes a lot of sense for her. We will go up to for investment properties. We can go up to about 3 million on an investment property for your loan amount, depending on if it's good FICO, good LTV. And then for an owner occupied, we can go up to 4 million. So with this one, it was a bit of a no-brainer because she has 7.4 million in stocks. And with this, since it's not tied up in a retirement fund, such as a 401k, right? This is money that she actually put into the market herself. For qualification, we will not take that 30% haircut. So there's no haircut required since it's going to be just in the market. So this one, super, super easy to get the income figured out, just so long as we have that 4 month seasoning of those asset statements. It's one of those things too where keep an eye out for large deposits, right? Let's say there's a retirement account. 3 months ago, it has 2 million in it. Out of nowhere, there's a $5 million deposit into that retirement account. Your underwriter is going to be asking questions about that, right? We do want to make sure that our funds are fully sourced, but more often than not, these are investment accounts that are relatively stable. Maybe they're putting a little bit of cash every month into the account, just automated, but and then we see the balance fluctuate with the market. But more often than not, we're not really seeing significantly large deposits. And in the case where there is a large deposit, we can just source it. And if we can see that, okay, this came from another investment account and they're just trying to consolidate everything, we can be flexible and try and make sure that it works pretty smoothly for you guys. So keep in mind with this, though, for the qualifying assets, if the funds to close are going to come from the stock account, the borrower will need to go ahead and liquidate 1.2 million from that stock account to a liquid checking account. And then when we calculate the income and calculate our qualified assets, it's going to be based upon 7.4 million minus the 1.2 million for your down payment. That'll get you about 6.2 million of qualifying assets for the asset utilization program. So that's some insight into Wealthy Wendy. If we go to the next slide, we can kind of transition over to working class Will. So Will is a software engineer, a little bit different than Wendy, not trying to purchase the third investment property. Instead, Will is unfortunately being hit with a little bit of Murphy's Law, right? Took a pay cut at work, about the same time that had some unexpected medical expenses come up. So looking to do a cash out, owner occupied, um, kind of debt consolidation transaction. So what's nice about non-QM is that if you communicate, it can be a little tricky, chat with your AE to kind of talk you through the different options, but we can actually commingle different income types and different programs. We can't commingle all programs together all of the time, depending on what documentation we've received already. But the asset utilization program, it has a tendency to commingle with other income programs pretty smoothly. So if you have a written verification of employment loan compared or commingled with an asset utilization, or even a full doc loan commingled with asset utilization, or a 12-month bank statement with asset utilization, we can actually go ahead and use both income types in order to get that qualification. So working class will, mid 50s, has about 600,000 in retirement funds and has just been diligently saving, right? So we can go ahead and think, maybe our DTI was 54%. We're having a hard time kind of getting this thing through to the finish line. But since you guys are diligent when you take those loan applications, right, you're going through the IPAC, the income, the property, the assets, the credit. You guys, as the broker, know, oh yeah, Will told me that he's got about 600,000 in his retirement, through work and everything. So then you can start thinking of the income, right? We're maxed out on our income. I can't get this DTI any lower. I don't want to drop the loan amount. We need to make sure he gets the cash that he needs for these medical expenses. We got to find a way to get this loan closed. So that's where this program can come in handy here. So remember that as far as, and this is a question that was asked earlier in the chat, so I want to explain this. Um, as far as what loan amount do we need to use this income, it's the lesser of 1.1 times the loan amount or $1 million, right? So if your loan amount is 2 million, we're not going to make you have $2.2 million in an asset account, right? As long as you have over 1 million, we'll use it. But in this instance, since our loan amount is 350, you take 350 times 1.1. As long as the borrower has $385,000 of qualified assets, we can actually go ahead and inch out a little bit of DTI or a little bit of income to help get that DTI through to the finish line. So he's got 600,000 in retirement. Now keep in mind, it is a retirement account, so we're going to take a 30% haircut off of that. And from there, our qualifying assets are going to be 420,000. Now keep in mind that we need to make sure we have 1.1 times the loan amount. So again, 1.1 times the loan amount is going to be 385. So we're good to go. So we can go ahead and use this income, inch this over the finish line, and then from there, yeah, and then there was someone confused about the scenario. That's a little bit of a typo. I meant to um, delete out the sales price. That was a remnant from another slide. So ignore the sales price there. That's good to go. And then, yeah, from there though, we can inch that DTI down, get the loan approved, and get it through to the finish line. So that's all I got for the working class will. And then I know there was a couple questions that maybe Nadia can speak to that came up in the chat.
Yay, thank you, Brennan. I see there's also a question, if you don't mind, can we please share with everyone? That's kind of a good question about trust. So what kind of trust would we accept, revocable or revocable for this product? Can you, Brennan, please answer again for everyone?
Yep. So if the assets are held in a revocable trust, that's something that we'll go ahead and accept for this program. If it's held in irrevocable trust, we don't typically permit the irrevocable trusts at A and D.
Okay, thank you. I also have some question here. Brandon, if you could see it, loan amount 350K, sales price, that's 43. Oh, you already explained that. Okay. Okay, perfect. I see we also have some questions here about the rates, and I see Nadezhda already gave some answers. If you don't mind, maybe you could give us a bit more detailed information about the rates.
The question was the comparison between DSCR and asset utilization. So in this case, we are comparing both on investment properties, and they are very, very close. I mean, if DSCR is 1 and higher than that, it's a little bit lower than asset utilization, but really literally by like a quarter and eighth. So if you have an option to go by asset utilization, you can go that way. If you want to go DSCR, you can go that route. But what is the benefit of asset utilization? Like, honestly, if I would have an investment property, I would just go DSCR. That's my personal preference. But when it comes to asset utilization, it's great that you are not limited only to investment property. You can go for owner occupied, you can go for second home. So I would look to those when it comes to those type of properties for sure.
Thank you. I see we do not have any questions for now yet. Thank you so much, Nadezhda, for so detailed information about the product. Thank you, Brennan, for giving us insights in practice. So you see, AD Mortgage is your partner for growth. So we are attached to even DSCR on that asset utilization products webinar. Whenever you have kind of our scenarios or you would like to share your business with us, please, you are more than welcome. We will be shared with our streamlined loan process, with our can-do attitude, that so we are as a power of yes trying to be as more flexible as it is possible, with our flexible underwriting and loan solutions for you to expand your business. Talking about our upcoming webinars, you are more than welcome to join our broker orientation. That's a webinar that we have once a month mostly for our new brokers. We will talk about our technologies, about our products in general. So you are more than welcome to join. Also on 15th of October, we have our Advantage Loyalty Program workshop. We will let you know more about our loyalty program, which we launched just recently. Talking about loyalty, whenever you attend any of our webinars, you will receive 500 points. That is available for our approved brokers. So if you approved with us, and you are as a part of our loyalty program, you will receive points, not only for webinars, but also for everything you do here in AD Mortgage. But webinars is kind of an easy way to get some points. Also on 22nd of October, this October, you will be able to join the Mortgage Experts webinar. That would be the sales success with Steve Richmond. So please join if you're interested. Once again, if you are still not a partner with us, you are more than welcome. You could use this QR code, or you could use the form, which is on our main website page. So please. I also see we have one more question for Ronnie here. Easy loan to work through. I recently closed one. Shout out. Okay. Oh, I see. That's kind of a feedback. Ronnie, thank you so much. Actually, we know Ronnie. He's one of our good brokers, by the way. Okay, so I guess we do not have any questions here, and we covered everything. Thank you so much again for your time. Thank you so much for you to be able to join the webinar. Thank you, Nadezhda. Thank you, Brennan, for your time and your knowledges.
Yes, thank you, Irene, for hosting it. Thank you everyone who joined. I really encourage you to join as many webinars as you can, because again, those are free points and you can redeem them for a lot of goodies, including rush closings, underwriting fee waivers, appraisal fee waivers. So that is something that can help out your borrowers to speed out their process or to reduce their closing costs. So we're having like at least 2 to 3 webinars monthly currently with all those programs and products that we are offering. So take advantage of that. You don't have to be super active. You can just join and listen to us, and I'm pretty sure that you will find a lot of things that you haven't known about our products. So very much encourage your presence on any webinar that is going on here.
Yay. Also, do not forget you will receive a brief survey. So if you have an opportunity, please do it. That's important for us, for your feedback, for us to be even better. Thank you, everyone. Wish you a great day and a wonderful week.
Thank you guys.
Thank you. Bye-bye.
Bye-bye.